Hey guys, it's me, Kevin. I just wanted to go quickly over the Twitter two SPY puts that we had. I just want to do a trade recap since many people were asking how I got into it, why I got into it, and why it ran for the amount it did. So first, of course, we'll look at the Twitter puts that I swung. As you can see, it was a swing. It was initially a day trade. We entered in yesterday, which is the 26th, and you could see around 10:42 a.m. Eastern Time is when I got in, and I got into the 49.5 puts. Again, it was initially a day trade, right? We had it for the April 29th expiration. It was around 56 cents when I got in, but I just wanted to show you why I got in and what was the reason for it, right? So I am a huge trader when it comes to what's it called, supply and demand zones, right? And you could see on my screen that the red boxes is the supply zone, while the green box is the demand zone. And you could see that the coordinates for the supply zone for Twitter, right? We're on the 5-minute candle, is $52.85 to $50.30, right? So on April 25th, we gapped up, right? And this gap up is here drawn as the gray rectangle, right? We gapped up into the supply zone, right? And we did have some bullish movement. This movement was because of Elon Musk buying over Twitter, I believe, right? And so we were still in the supply zone. And you could see that even though we did have bullish movement, near the end, after the news came out, right, you could see that the movement kind of slowed down. So, and the close was, I believe, right over here, right? Yeah, this was the last candle for the 25th. So basically Twitter, right? Twitter opened up a few cents below where it closed on the 25th. So on the 26th, it opened at around 51.60, right? And on the 5-minute chart, we immediately have this big red candle. Now, the fact that we were already in a supply zone, right? We were already in a supply zone for Twitter. This already has some bearish sentiment, right? If that's the word you want to use. So let me show you what exactly else I was looking at. Sorry, I'm not that knowledgeable when it comes to TradingView because I've been using Thinkorswim for most of the time, so TradingView is a little bit new to me. But I know during the time I did have this line right here, which I deleted, right, since it's past entry. But I had this white line, or just basically a line, which was the bottom of this candle right here for the first candle, right? This was the first candle after the gap up, and this was the lowest point of Twitter on the 25th, right? So that's where I set that line, and that's where I was looking to enter, because first of all, it was below supply, right? It was below the supply zone, and it was below the supply zone, and this is the low of a candle, the lowest price of any candle between the 25th and the 26th, right? So that I was probably going to enter at that point. You could ignore the circle and this line for now. I'll get into it later, but you could see we opened up, right, and I'm on the replay feature right now, and you could see that on the 5-minute chart we had some hesitant candles after the first drop off. This is obviously just a cool off, right? This is a cool off. This is institutions trying to just play around with the price, trying to get it as high as they can so they can get as much profits when shorting. So you could see right here, right as this candle just opens up, right, and I pause it right here, right as we receive this big long candle, it's a big body candle, right? So this candle was inside the supply zone, opened inside the supply zone, but ended up exiting and closing outside the supply zone without having a long wick, right? So this itself shows the momentum, right? The selling momentum was very strong. So this therefore indicated that there was a higher probability of bearish movement that is going to follow it. So this circle actually represents where I enter the puts because it broke below this line that I had at 50.25, right, which was the low of this candle right over here after the gap up, and it also exited the supply zone. Now you could also see in the volume followed with this as well. You could see the prior candles, it was a kind of iffy, right? It was low volume, but you could see in this candle there was immense volume and it was supporting the selling momentum. So you can see once I press play, obviously, right, it was a big candle, so there was a little bit cool off. But you could see in a little bit, Twitter starts dumping, right? Just give it a moment. But you could see as the day went on, the Twitter started bumping and it started hitting this top trend line that we later on created, right? And then right around this area, it was near market close, and you could see, let me just show you Discord, you could see that we entered at 56, Twitter eventually hit 62, which was 10% profit. And one word of advice, when you enter in a position, always set the limit order, right? Like the limit order to sell, because if you're just going to wait for the price to reach, like, let's say 10% profit and then set a limit order, you have to realize a lot of other people are already in line to have their orders executed before you, right? So you're already at a disadvantage. That's why when you enter a position, you want to immediately set limit orders to sell your position at certain points. That's exactly what I do. That's why I get these fills earlier than you guys, because immediately after I enter, I set my trims. So what you can do, usually I go into increments of 5 or 0, and that's what institutions do as well. But if you want to get a better fill, go in increments of 4 and 9. So let's say we enter at 50, and I say we're going to trim at 54 or 60, right? I mean 55 or 60. You could set your trims to either 54 or 59. So hopefully that helps you guys out, in getting a better trim. But you could see here, throughout the day while I had Twitter, right, it was kind of shaky because we broke above and then we broke below, but then we kept on trading sideways. But then it eventually hit 14% profit, right? And then Twitter eventually hit 14% profit, and then it actually went up to I think it went up to like 75 or something. So it was about like 40% or 30%, I believe. I can't do the math on top of my head. Around 3:56 p.m. I actually alerted saying that I'm swinging these, and the reason is because around this time, let me get to 3:55 p.m. This is 3:55. No, not yet. Sorry. This is 3:55. No. Okay. Dang, okay. So around 3:55, which is this candle right here, you could see that even though we broke above this trend line, we started testing it, right? And we rejected the supply zone. So even though we broke above this trend line, we rejected the supply zone, which shows even further indication that this supply zone is strong. We rejected it and we started trading down to the downside. So because of that, I had strong what's it called? Strong confidence, I guess you could say, because I can't think the word on top of my head for some reason. I had strong confidence that Twitter will gap down. And the reason why is because usually stocks, after gapping up or gapping down, they tend to fill the gap, right? Or fill the gap or the previous gap up or gap down that happened. So I had high confidence that after getting rejected by the supply zone and still having this gap down to fill, I was confident that Twitter will end up gapping down and filling the gap. And that's exactly what it did. So you could see here, right, this is the open. You could see right here, Twitter gap down. It filled the gap down, the gap up from the 24th to 25th. Which is this gray rectangle, right? So it filled this gap up, so we could delete this rectangle right here because it's no longer, the gap was filled. And that's exactly why I got into Twitter. And as you can see that throughout the day, it ended up dumping. I exited around like right over here, and that's how I ended up swinging the Twitter puts, right? So that's why I entered Twitter also, and that's why I swung it Also, there's a rule of thumb. It doesn't always follow since we're in a choppy market, but in a stable market, usually when you reject a supply zone or you reverse from bullish movement to bearish movement in a supply zone, you would trade to the next demand zone, right? Or vice versa for demand zone. If you're in a demand zone and you break out of the demand zone, you would trade to the next supply zone. So that's another reason why I entered, or why I still kept the Twitter puts as a swing. Now, the next stock, right? The next stock we're gonna look at is obviously the stock that I've been known to trade, which is SPY. Let me go and tell you the reason why I entered SPY. So SPY has been bearish as of late, right? And if you actually see my trading log, we had 2 trades for SPY. The first one was 415 put, which ran for 236% profits. So let me scroll down to that. I was looking at PayPal, but eventually I just looked at SPY because SPY was a better opportunity. So you can see at 9:51 a.m. Eastern time, because I'm in Eastern time, I said looking at SPY 14 put contracts, right? So let's see, where's the 27th? Okay, I'll tell you. Okay, so before I get into this trade, the way I was looking at SPY, you could see that the green rectangle represents the demand zone, and demand zones basically tells you that there's a high probability of the stock, if we were to trade down into it, for it to reverse into the upside. But as you can see, we have been actually in this demand zone, and we already entered the demand zone and exited it right into the supply zone, and on a previous day. And because of that, the supply zone is already weaker because we already entered and exited the supply zone. Also, you have to keep in mind that this demand zone is actually, I believe, pretty old. This zone was created on March 14th, right? And obviously, when we're looking at this, was the 26th and the 25th. So you could see we entered the demand zone again, which was between 421.86 and 415.79. And you could see we entered it, and we kept on trying to break above it, but we could not. And we tested it like about 2 times right before the alert today. And on the 3-minute, you could see that we actually tested it 3 times, right? Over here, and not over here because this is where I entered. So actually over here, and over here. So let me go back to open of today, right? Which is the 27th. Today's the 27th for anyone who's going to watch this video later on. So you could see that right at market open, since we're in the demand zone and we're reaching the bottom of the demand zone, it was expected for there to be a, well, that was too fast. It was expected for there to, let me go back, sorry. Let me go back for just a second. Sorry about that. But you could see that because we touched the bottom of the demand zone, or we're close to it, there is a higher chance for there to be a reversal. But since this zone was so weak, it's not that probable that we would break out of this zone, right? So you could see that since I press play, let's enlarge it. You could see that we started reversing into the upside. But then even though we did that, you could see that we tested the top right over here. But even though we did that, it was pretty weak and it couldn't break above it. So this is where I ended up taking the 415 SPY puts, and right over here I took it around 9:54 a.m. Eastern time. And sorry about that. And so I entered around here. And the reason is because we touched the top of the zone, the demand zone, but we obviously were not strong enough to break above it. So I entered into puts right here, and you could see following it, we had a bunch of bearish candles, right? Since we rejected the top of the demand zone, and that's exactly why I entered in the first place. And then we traded all the way till the bottom of the demand zone, and there was a support at 415.22, so that's why I entered. And then later on in the day, I entered again into puts where we touched the top of the demand zone, right? I entered right over here, but it ended up only being 18% profits. So yeah, but actually I'm in a few contracts right now, so let me check right now what they're at. But that's basically why I entered. I just wanted to give you guys a brief reason about why I entered and everything like that. Hopefully it helped you guys out. See you guys next time.